Welcome to our Equity Research Deep Dive. Today, we are looking at a pivotal moment for a prominent Indian mining PSU. After several challenging years of staying in the red, the company has finally turned the corner, reporting its first profit in years. This recovery is a significant signal for the mining sector and PSU stocks at large. However, this success comes with a massive asterisk. For entrepreneurs and wealth managers, understanding the tension between operational success and regulatory liability is key. Let us look at how this miner managed a turnaround while facing a staggering 1,563 crore rupee demand. The core of this turnaround lies in operational resilience. The company saw a surge in demand for iron ore pellets, which are crucial for the steel industry. Improved realization prices and better cost management have allowed the company to move from a net loss to a positive bottom line. This isn't just a fluke. It is the result of optimized production cycles and a favorable global commodity market. For investors, the stabilization of EBITDA margins is the most encouraging sign here. It shows that the business can generate cash when the external environment is supportive. Every silver lining has a cloud, and this one is worth 1,563 crore rupees. The company has been served with a massive demand notice regarding statutory dues and past levies. To put this in perspective, this demand could potentially wipe out the entire profit generated in this turnaround phase. This is a classic contingent liability that investors must account for in their valuation models. If the legal ruling goes against the PSU, the balance sheet could face severe stress, reversing the gains we've seen recently. This is a critical risk factor for any wealth management strategy involving this stock. How is the market reacting? It's a tug of war. We saw an initial spike in the stock price as the profit news hit the exchanges. However, as the details of the 1,563 crore rupee demand became clearer, the gains were capped. Institutional investors are playing a wait-and-watch game. We are seeing high trading volumes, but also high volatility. For those seeking professional growth and market analysis, this is a perfect example of how headline news, the profit, can be moderated by fine print, the legal demand. The stock's technical chart shows a resistance level forming near the pre-demand announcement highs. In conclusion, the PSU miner has shown it has the operational chops to be profitable again. However, the 1,563 crore rupee demand is a significant hurdle that cannot be ignored. For conservative investors, the strategy should be to wait for legal clarity or a settlement update. For those with a higher risk appetite, any dips caused by the demand news could be seen as an entry point, betting on the company's operational strength. As you manage your wealth, remember that in the PSU space, policy and legal risks are just as important as production numbers. Keep a close watch on the court proceedings regarding these dues.